Right then, so watch list creation for Monday. I'm either looking for a first red day or a first green day. I can have B grade first red days and first green days, which have broken either a high or low. Um, I'm also looking at higher time frame M and W formations, and I'm looking for Monday to either be a continuation trade or reversal trade if it's a day three or the fourth day after, or day four after 3 days of longs or shorts in the market. Um, green days and red days. So if we've got 3 green days in a row, then on Monday, so if Friday closed as a third green day, then Monday could be the reversal of that, could be the continuation of that. But there is more weight towards a reversal trade if London hasn't already done it, hasn't already significantly corrected it, and vice versa for red days. Um, so I'm looking for the reversal on a Monday, or I'm looking for the continuation. It can be after 3 days of green or red closes, or it could be after 2 days of green or red closes, because I'm on the third day, of which could be either a continuation trade or a reversal trade. But I have to have had broken out of the previous day's high or low. And I'll talk about that as we continue. So we might as well start with stocks and see where we're at. So so my question is, do I have 3 days worth or 2 days worth of green closes? No, I've got a first red day. Friday closed down after a series of green days, so this is a first red day. Now the NAS is two all over the place, green, red, so it's too choppy for me, not interested. No signal day. Same with the S&P, no signal day. Same with the Russell, no signal day. Gold is a first red day for me. Now, ideally, you want to have seen this day on Wednesday, a green day, because we want to see lots of green days leading into the red day. But considering how hard that rallied on Thursday up to last week's high, rejected at last week's high, closing below the closing price, obviously, for a first red day, then this could be the recipe for a downside continuation. Where is the money? Below Wednesday's lows. So Monday could be an all-in day, continuation day. Could be. So I'm classifying that as a first red day. Now, silver might be a better candidate, might not, but it's got plenty of green days and then a first red day. Noting also it broke out of last month's highs. That red line is last month's highs, and it's potentially failed. So it could be coming lower based on that. Um, Looking for last week's highs and stops where breakout traders are now in the market, breaking last month's highs, last week's highs, really encouraged by that. So the price may well dip into those longs. So this could be a good candidate for a first red day, all in day on Monday, a day one Monday, all day runner. Don't counter trend on Monday as a first red day. Right, sterling Swiss too choppy, no series of breakouts, no signal day. So I'm just going to skip through so I don't have to go through each pair. But as you can see, all of this stuff I'm not interested in. I need to see a series of 2 green days or red days in a row, or a series of 3 green days, or a series of 3 red days in a row, or a first red day or a first green day after a series of green or red days in the opposite direction. Right, sterling yen. I've got 3 days of breakout traders in the market. So I'm either looking for, so I'm going to be on day on day 4, and therefore that might mean that Monday sees the reversal of this. So Monday could be an all-day long trade. So I'm putting this as a um, reversal trade day 3, even though it's on day 4. It's day 3 was the trigger day for the reversal, and targeting Friday's stops. So ideally, what we want to see is the price coming down, and in the US session, we are above the EMA to go long, or it's a continuation trade and we're above the EMA to go long in the US session for a scalp of that, and potentially targeting even Thursday's stops. So in that respect, I've changed this category to a continuation trade on day 3 itself, or it could be using day 3 as the trigger, so that you're actually on day 4 either continuing with the trend, or you're um, going in a reversal of the trend. Now, it's important not to confuse that I've said day 4. There's no such thing as a day 4, but it's just to illustrate that it will actually be the 4th day after 3 days. So 1, 2, 3. Monday will be the 4th day after the 3 days, but in fact, Monday is a day 1 because Monday resets the day count for a new weekly template. So, for instance, if this were to continue going lower on the 4th day of shorts, 1, 2, 3, and then a 4th day of shorts, it will be counted as day 1 shorts. And then on Tuesday, Tuesday will not be, I will not trade on Tuesday, because I'll be looking for Tuesday to be a trigger day. Tuesday will be my trigger day if it is a first green day. So Monday might go lower, and then Tuesday might turn green, and that's my trigger day as part of a series of sell-offs and a first green day to go long potentially. So Tuesday will either be a first green day for me, or it will be a nothing trade. I just won't trade that day. Well, I won't trade that day. It's either going to be a trigger day for me or nothing at all. It could be a trigger day in the sense also that it is a continuation of the red days. So if we get Monday red day and Tuesday red day, we've now got 2 days of shorts in the market as per Monday and Tuesday. So I'm disregarding what's happened on Friday and everything before last week, apart from the levels, last week's highs and lows and so on. But Tuesday might be another red day. So we've got 2 red days at the start of the week. And then on Wednesday, I'll be looking for either a continuation of that, or I'll be looking for a reversal of that. And then Wednesday will then become if I get a reversal of that, then Wednesday will be my trigger day for Thursday, as it will be a first green day. Now, I'm putting it in the category of reversal trade day because I'm putting more weight to it as a reversal opportunity, because it's after 3 days of shorts in the market. I've got 3, in fact, it's 3 days of shorts in the market. We've just broken out of this prior low. We've just broken out, so it could be a failed breakout and then a continuation, or it might be that we've just broken out, we're pulling back for another breakout. And if that's the case, I'll have to switch the narrative and my thesis to go short, depending on what happens when I come into my US session, depending where the market is, the price is in relation to the close of Friday. So, for instance, if the price has gone up, up and up and up, then the move might have been done, and the trade might be for a continuation. But if it's really high up, then I'm not going to want to counter trend that, and I might just want to align myself with the trend. I'm just looking at EuroCAD. EuroCAD, as we can see on a 15-minute time frame or even the hourly, um, we can see that we've got 2 days of uh, longs in the market, but we haven't got 2 days of breakouts. We haven't broken that high, so that's interesting. So this is an inside day close. So we've got 2 days of long. So my take on this now is, well, if we didn't break the high, perhaps this is running out of steam. We got both longs and shorts battling it out. We've got stops above and stops below. So what's my thesis now then? Is this a day three continuation trade, or do we think we're going to get a day three reversal? So now what I want to do is I want to look at the higher time frames. And the higher time frames show me that on this weekly chart, we've come right up into this supply area. So perhaps, and we've also got how many weeks long? 1, 2, 3, 4, 5. That's quite a lot of weeks long. You've got all of this length to come into. So where is the money? Well, the money is in all of this. And we've already come up into money from there. So perhaps it's time to look for the reversal. Just a hunch. Don't know. No idea. But that could be the scenario. We've also come up into this supply area. So perhaps the bias is lower. So if we come back down to our um, template, we know that we're in a resistance zone. We failed to make a higher high. We've got um, two higher closes. So perhaps this is on Monday, it's day three for the short. And we can target below this level here where there are stops for a all-in day on Monday to the downside. So I'm going to put that as a day three reversal bias. Right, cable I'm going to put as a day three continuation trade. We broke Thursday's high on Friday. So we've got day one, day two longs. Maybe we're going to have a third day of longs, a third day of longs in the market. So I'm going to put that down as a potential longing opportunity, as a continuation trade on the third day of longs. Also noting we broke last week's high, we pulled back, and we've come up again above, we've closed above last week's high. So on Friday. So perhaps that's showing intent from the bulls. The bulls are still in control. I've got dollar yen. I'm going to mark it as a potential reversal trade on day three because it's at last week's low. It failed, and perhaps we are going to come up into shorts and target the prior week's highs. Also noting on the weekly chart, we hit stops on the upside and the downside. So we first went up, then we came down. So perhaps we're going to continue going up in direction of that initial stop hunt. So we went up, down, taken stops to go long. We've also got this M formation, which could pull the price back up towards the midpoint of that, the neckline. And we're in the sort of supply area, the support area, as per that candle. So come back into the origin of that impulse. We've come back in. Perhaps now we're going to continue up. Oil, we've got a first green day. Kiwi, I'm going to put this down as a low grade, a B grade first green day because I'd rather have seen this as a red day. I mean, this might be a red day. No, I don't think it would have been, depending on your broker. But we want to see a series of red days before the green day. But nevertheless, it is a market that was in a downtrend from last month's highs, and therefore you've got sort of one, two, three days of lower lows, and then the green close. And also, we've broken above last week's highs there. We've come back in for the stop hunt. So maybe the stop hunt is done, and we are now reversing, and we're going to have another attempt towards last month's highs to get back above last week's highs. So therefore, I think the momentum is front side going longer. So I'm going to call that. I'm going to give that a first green day B grade scenario. Right. This was a coiled market. We've got 2 days of longs here. The inside day stops were hit on the downside first, and then on the upside, and then again we came down lower to take out stocks below the low, and then we've been sort of creeping up. So this could be potentially an explosive day one Monday continuation trade, day one, day two, day three, or the first day of the week. So day one, day two, day three continuation trade, and it will be taking us, dragging us up into the supply area. So that's pretty firm here as well on the week. So it looks as though it's a market that's got momentum in this to continue up into the supply area. That candle there, the origin of the downtrend, perhaps we're moving back up into supply. And that's also in line with cable. Now, euro yen is an interesting one. Um, these wicks tend to get filled on the prior day because it's a pullback. It tends to get filled. So that's the daily chart, but we have got 2 days of. So day three could be a downside continuation day. So I'm going to put it as that. But that means that the euro thesis is a weak one, and so is the bullish dollar yen is a weak one. Because for this to eventuate, we're going to need to see a strong yen, but we've got dollar yen as a bullish reversal. So Swiss yen, I'm going to put as a reversal to hedge bets against the euro yen. And that brings us to a close of this watch list creation. So we've got first red day setups. We've got a minor grade B first green day. We've got a first green day in oil. We've got ideas of continuation trades here and ideas for reversal trades here. Now, these can be the complete opposite by the time we get into the US session, but these are the ones, all of these are giving us potential opportunities, whereas these are just too much fugazi, too much inside, too choppy. But these are giving momentum trade opportunities one way or the other.